Hey, good morning and welcome to the live stream. On this live stream, we are going to talk about stocks, talk about investing in stocks, and all the things surrounding stock investing, stock trading this week, specifically today. Talk about the biggest news items and take a look at stocks from a fundamental perspective. My colleague Daryl will be looking at the technical charts. How you doing this morning, Daryl?
Doing great, Victor. It's good to be here. Hello, everyone.
It is great to be here on a Wednesday, March 11th, and the market has been a tricky one here in 2026. It always is tricky, but it just happens to be more interesting than typical. We've had some oil prices that have been higher than last year, and I'm going to get to that next. But this morning we had a story, or I should say, some economic data released, and I thought it was good news that the consumer price index prices rose 2.4%. And to me, that's really good news. Here's a chart looking at the last 5 years. And boy, inflation was a bad problem in 2022. It was really high. And I'm sure everybody felt it. Some prices on things just got really crazy. And it was really destructive to the consumer. 2.4% is really comfortable to me, and I think it's good news. What do you think of the consumer price index?
Yeah, it looks good. It's on the right track. There's always people talking about it could come back, but we'll just have to see. But so far, so good.
Yeah, and looking at this chart here, I mean 2.5, the 2.5 line is right here. So if I go back and we've been dealing with some reasonable inflation for a year. Okay. Now that's, is that long enough? Well, I don't know how to answer that question, but I could tell you a year looks pretty darn good. And coming off of the inflation years we had, that's pretty darn good. And these were created because of COVID and stimulus. Both were around the same thing, right? We had a pandemic, we had governments doing a couple things. One, they were stimulating the economy, sending money to people. Two, especially in China dealt with COVID differently than in the United States. They would shut things down. They'd be like, "Oh, there's a COVID breakout in this factory, shut it down. Oh, there's a COVID, breakout here, shut it down." And that uh, disrupted supply chains. It created scarcity and it created higher prices. So that scarcity got to the market. Shipping rates, if you remember, companies like Zim were just flying higher because the shipping rates went through the roof because there was scarcity and a lot of things were going on. So the economy, this was not sustainable. This was like terrible. And over time, this is what the Federal Reserve's been focused on. If we could stay around here, heck, we could be at 3% inflation rate. I think it's fine. But I think the Federal Reserve's been able to get this thing down, or I should say the economy has been able to get it down. Part of it is I happen to believe that the economy is doing okay. It's like just doing okay. It's not doing great. Some industries are struggling, as a matter of fact. Like car business, right? The automobile manufacturers, they're just barely growing, and there's a lot of competition in that space. I think buying a car these days, depending on the car you want to buy, but you have a lot of choices and there's a lot of inventory. And there's some industries that are really probably having deflation. And then you have some industries naturally that are going up. Some of the material stocks have been going up. Of course, oil is going up. So we'll see how this plays out, but this is good news. This is good news. Speaking of oil, so oil prices are moving higher today, not too much higher. but there was some stories that some ships were getting hit in the Gulf Coast. So the longer this thing takes, right? And I don't think we're going much lower from here on oil prices, because what we were dealing with a year ago when we had oil prices in the 50s and 60s was I don't believe that there was a lot of thought and concern around any kind of geopolitical problem in the Gulf Coast. Like, there was no war, there was no conflict, there was no disruption to oil extraction and production facilities in Saudi Arabia, Iran, Iraq, Kuwait. These places now are first, they have been affected. They've changed their production schedules or extraction schedules. And I think moving forward, it's logical to think, well, there's a higher chance that we're going to have more disruption. And I think that's just rational. Like, hey, there's a higher chance because negotiations could go wrong. Maybe some other groups get into the conflict and start creating noise. A lot of things can, right now, the situation's volatile. So, oil. I think oil is going to stay here. It could go higher. I don't think it could go much lower. Your thoughts on oil? Anything you can share about oil?
The futures, looking out a year or so, has it back down to 60. So that's a year out. We're sitting at 86 right now. There is going to be some volatility. I heard some reports in addition to the cargo ship that was hit in the strait, that the Iranians are also laying some mines. So we'll have to see what comes out of that. The market seems to be taking that in stride at the moment, but we'll see what happens.
Yeah, we certainly we'll see that, because it's really got everybody's attention. And I know that some travelers got caught in the region where they were traveling for tourism, and they couldn't get out.
Right.
So we'll see how things calm down. Okay, so that is oil. The market year to date, the S&P, we're down about 1%. Boy, it's been an up and down situation. And some sectors have really been beat up, and some sectors have been rising. So it's been a market where picking the right places to invest in are the difference between a portfolio that's gone up or gone down. Micron's up big time. Intel. So some semiconductor stocks that are catching up to the gains that Nvidia, Broadcom, AMD have had are really doing well. Software stocks have been really beat up. So this space here is really priced low. Here's some more semiconductor. Hardware stocks are doing well. Dell did have very good earnings on their last earnings call. Corning is really moving up because they're starting to make fiber optic cabling for data centers, and they're expecting to be able to sell more product. Industrials are doing well this year. The aerospace and defense, relating to this war, they're selling more jets, missiles, and equipment. The piece that I don't quite understand is I don't see that we have a terrific economy for Caterpillar and Deere, but their stocks keep going higher. Am I missing? Do you see something different that explains why these stocks are moving up so much?
Well, I know Caterpillar makes turbines for powering the data centers. I don't know if Deere is into that or not, but GE makes those turbines as well, turbines, however you want to say that. So that's my only thinking at the moment. They're heavily involved in the data center
Yeah.
build out.
Good point. Consumer staples have been picking up more investors as investors are looking for safer stocks. That's completely explainable there. Of course, energy is higher because you have a higher oil price, so these companies are going to be paid more. Utilities, safety area, safety stocks. So utilities are doing quite well, and material stocks are doing great. All right, so looks like we've got Anderson. Good to see you, Anderson. Alex, good to see you. Thanks for joining. And we wanted to get into some stocks, starting with UPS. And UPS is a stock that has really been beaten down. And the story has been, I think the main story is the volume that was for Amazon. Amazon has decided to handle a lot of their deliveries. And I think Amazon's story is that they want to have greater speed in delivering to their customer. They want to have like a shorter delivery window, which gives the end consumer a better experience. And all those things make sense to me. But it comes at the expense of UPS, who has seen its revenues go down over time. But it's UPS. It's a really good company. It's a necessity to many businesses. They're still going to do deliveries via parcel. And the stock was really beaten down from 224 down to 85. So I thought it was a good opportunity. Started investing in it, and they pay a nice dividend, 6.5% dividend. Now, we've seen that this has been the case. Let's study what's happened to the company. Did their revenues actually go down, and what's supposed to happen with their revenues? So we did see a contraction in business. Now, they benefited from the COVID situation, right? A lot of people were at home, and you can't go to the department store to buy some stuff. So you got to buy it online, and UPS can deliver it. But then we had a contracting year in 2023, which is it explains why the stock was selling off. Okay, that all lines up. And then we had 2025, a contracting year. But as I look forward, we're going to start seeing some growth. And this business is still a very good sized business. We're eventually getting back to being over $100 billion in revenue. And its profits are really going to expand nicely. So fundamentally, this business is going to improve. It's going to get stronger, more profitable, generate more cash. Its PE ratio is dropping. That's a positive. And overall, I'll show my valuation of it after the charts, but I think fundamentally the value of UPS is rising. Let me kick it over to Daryl. I'll let him take a look at the charts, and then we'll take a look at the valuation.
I think we looked at this one last week, and I also covered it in my weekend video for my portfolio holdings. But I had started seeing some deterioration, not only in the price here over the previous 2 weeks, but we saw a pretty precipitous decline in the RSI and in the PPO. So I had sold about 20% of my shares in this time frame. And that was about $115, $116 on average. And then they really fell off a cliff with the oil prices, because that's a big input cost for companies like FedEx and UPS. But what I'm seeing now is we did hit a support line that it did trade below. We had, let me see here, 1, 2, 3, 4, 5, 6, 7 straight days of selling. And yesterday we had our first day of buying on average volume. These 4 days were all above average volume. So basically, I want to point out that if you did exit up here, this is probably a good place to start thinking about adding some shares, and I actually did that yesterday.
Very good. So looking at the valuation on UPS, and UPS, you know, you have to make a lot of qualitative decisions on stocks. It's not like, hey, every stock is the same. You're buying, like you're going to Home Depot and buying bags of sand. It's sand. There's no difference between one brand or the other. Nope. UPS has a very strong history. It's part of the economy. There's some things there to me that don't show up in their financials. You have to have awareness of who they are in the economy, what their brand's about. So I can take that into consideration. I'm still putting a higher discount rate on UPS than I would with a better business. Better would be better balance sheet. Maybe the economy is doing better. But it's coming with a higher discount rate because they have that debt. But overall, this is a reasonable discount on UPS. And I like that dividend, by the way. I think it's a solid dividend. So this one here is going to be a buy for me. And I think it's going to be a good investment. So far, so good. I picked it up at the right time. And it's going to be, I think, a lower risk investment. The economy in the U.S., I think it's going to keep moving. It's going to keep, people are going to keep buying stuff, and businesses are going to keep ordering components and parts that UPS is going to deliver. And I think UPS is going to work out nicely. And I think their valuation can improve. If they hit that forecast that I showed earlier, I think UPS in a year could be valued more because their fundamentals have changed, and their fundamentals have changed for the better. So that is UPS. Looks like Falls Grave is on. Good to see you, Falls Grave. Peyton. So I'm hearing a little chatter that Astera Labs may have crossed the death cross, entered the death cross. Can we take a look at ALAB real quick? And because I don't want that to haunt me. And just to kind of get things moving on, ALAB. This is an interesting company. They do semiconductors, of course, to do the networking and the communication between large clouds. And that is important these days. And their chart is just really something. Now, the chart, this is a recent issuance of a new stock. They became public 2 years ago. So it's not a super old company. They really rose, and they've kind of backed off that all-time high. Their growth continues to be really exciting, really fast growth, and really high profits. Okay, this is a really profitable situation for a high growth company. And let's take a look at their forecast. We've got 17 analysts looking at the stock saying, whoa, there's an opportunity here, folks. There is an opportunity. We're going to see growth this year of 60%, followed by 37, followed by 27, followed by 7.8, and then we'll have a contraction. This would be normal in semiconductor. Okay, this is semiconductor is not, it's not something that just Coca-Cola. Hey, everybody keeps drinking Coca-Cola. Nope. This is, you see a build out and then it subsides. This build out has been the biggest data center build out in history. This is huge. So these guys are going to ride that build out and see a lot of new revenue. Their PE ratio is going to drop, and it's going to drop at the right time. I think once they get to this point and they start slowing down, that's a rational PE ratio if they do slow down. But if they keep putting up these huge numbers, I'm staying in it. So the last earnings we saw were the last quarter of 2025, they grew at 91%. Incredible, man. 91%. They're supposed to put up an 80% growth, 87% growth number in the quarter that we're operating in, and 64, and then 34, and then 29. Fundamentally, this business is really exciting. Let me kick it over to you and see what this stuff about death crosses and stuff is all about.
Yeah, so we did get that. So basically, a death cross is when the 50-day moving average, that's this blue line, and the red line is the 200-day moving average. So once that crosses below the 200, that's a death cross. So let's go back out to a year just so we can establish some context here. So they did reach their high of 262 or so last September. We had the big sell-off in risk assets in October, November, and December. Started to get a bit of recovery in January, and then February, at least the middle onwards, we've seen a steady decline. And we had a couple high days of volume here, and that's where the big drops occurred. And then the volume went below average and is now trading right at average volume. The 50 days declining, the 200-day is still increasing. They are trading below a downward sloping 21-day. The RSI is at 39. The PPO is in negative territory, in bearish territory, but it looks like we may have gotten a crossover yesterday. We'll have to see how that continues. We can also see that they've been in distribution here since the end of September, basically. So now I'm going to zoom back in now that you know some of the context. And basically, you can see where the points of resistance are. The 21-day is at around 130, and the 50 and the 200 are sitting around 152. And we also have this trend line that's just barely above that at around 157. They did manage to find support at this downward trend line, and had some buyers step in a couple of days, but it seems to be just trying to figure out where the price should be at the moment. I don't see anything significant other than that death cross, which always gets some news.
And explain why it's called a death cross, and kind of explain it like so I guess the average business person can understand. This is why it's a negative situation.
Well, 50-day is a short term, so a typical month has around 20 to 22 trading days in it. So a 50-day moving average is basically 2 months worth of data. The 200-day is about the number of trading days that we have in a trading year. So that's a much longer average. So basically, when it crosses below that, you're watching trend over the last 2 months get weaker and falling below an average price over the past year. So that's why it's significant. One of the things that's somewhat encouraging on this one is the 50-day is not very far above the 200-day. So it's just been collapsing. But based on the slope of these lines, I would not, it's not like some other ones I've seen where the 50-day comes dive bombing through the 200-day. This one is just kind of gradually getting there. So I don't see that the 50-day is going to drop really quickly. They were pretty extended back in October, but you can see they've just converged slowly over time. And finally, we got to a point where they crossed below. So I don't see a lot more pressure to the downside, I guess is what I'm saying. Hopefully, the duration of those moving averages, hopefully that helped explain why it's important.
Yep. Excellent. Thank you. And I'm trying to look for a piece of information, then I'll get back to my screen. So, all right, I couldn't find it, so I'll just move on.
Yeah, I'm going to pull up United Health because I think that was a little bigger.
Yeah, pull that up. We'll talk about United Health next.
Well, it wasn't that bad, but you could see it really came down and crossed below it, and you really started seeing that divergence here. So that's why those are important.
So going back,
go ahead.
Going back and looking at this stock, got to a live stream, way back here, and it's incredible. This stock really rose nicely, and the situation that business was in was really impressive. That they were growing so fast. In this era, they were growing like 200%. And I thought it was a terrific business, but it's like, okay, well, it's really being met with a lot of excitement. It's too close to its IPO date. It IPO'd 2 years ago. And so I waited. And later on, the market decided, we don't care about this 160%, growth rate on top line. We're going to sell this thing off. And it sold it off. This was during it hit its low during the tariff driven sell off in 2025. And it created an opportunity. So I took that opportunity and I invested. And it really worked out nicely because the stock rose fast from April through August. It rose 250%. So I cashed in my full investment in the company and kept the rest of the stock, and pretty much have, I'm pretty much playing with the house's money. And the stock rose a little bit more, which, okay, it rose a little bit more, a little bit of, second thoughts on, well, maybe I sold too early, but it's ended up being the right move. So I've been accumulating more shares in Astera Labs recently. It's still a very positive business for me. I think the market, it's a smaller cap compared to the NVIDIAs and the Broadcoms and so forth, but it's nicely discounted, has a terrific balance sheet. I was trying to figure out if they're buying back shares because they have a market cap of about 20 billion and they're generating a lot of cash. So if you start buying back your shares, that might be a really good idea. Or if you have ideas for a new business or a new product, a new semiconductor product, terrific. There's a lot of addressable market for this business. They have one niche within the data center. That niche is really important. So I'm going to keep my shares of Astera Labs. I'm probably going to add some shares. If the market wants to sell it off, I'll buy some more shares. And I'm invested in semiconductor. I own big semiconductor companies, and this is the one smaller cap. It's hard to find a small cap in semiconductor because it's gotten so expensive. But this is the one that I think is a terrific business. And I would not be surprised if they get acquired. It's a good acquisition target for somebody who wants to control this space. A Broadcom's a big acquirer, or somebody else like AMD. They're in the data center. Of course, NVIDIA. I don't know if that NVIDIA is a big acquisition-based company, but maybe now that they have all that money, they're like, hey, let's go pick up some Astera Labs. Let's just go buy the company and add that to our portfolio. So I think Astera Labs is looking good. Let's take a look at United Health. We'll start with the charts. Over to Daryl.
Yeah, I just wanted to look at that. Just wanted to look at that 50-day. So they were pretty close to one another before all of the hubbub started last year, but you can really see how the 50-day just kind of fell off a cliff. It just followed this trend line down right here, and you can see how far below the 200, which is up at this trend line. I mean, they got to be 35% apart from one another. So the near-term price action was changing a lot more quickly than the 1 year, because the last 50 days is only, a quarter of that 200-day moving average. So I just wanted to point out how fast they can change once something starts happening with the price action.
Thanks, Daryl. All right, so market has opened. And are we moving higher or lower? Let's see here. So we're 2 minutes into the trading day. The S&P's up a little bit. NASDAQ's up a little bit. All right. Looking at the heat map. Looks like the software space is having a terrific day. That's good. Now, they had 2 good weeks. And then this week hasn't been all that great. But today's having a good day. We'll see if the rally in software continues. Adobe, I think they announced earnings today. Let me double check that. After the market closes. No, tomorrow. Tomorrow they announce earnings. So that'll be interesting to see. Adobe's just been beaten down, just really beaten down. The whole story that, AI is going to make the process of developing software easier and maybe even take away some market from them, because Adobe is a creative, software made for creative aspects or occupations like graphic arts, all kinds of video editing and all kinds of stuff. And it may be that, you have some AI products and solutions that make it far easier to create some of these really cool graphics. It could be a threat, but it also could be a huge opportunity if Adobe seizes the situation. We'll see. We'll let Adobe figure that out. If they keep growing their top line, Adobe is going to keep proving that they are part of the future, and they're putting up good numbers to prove that. So tomorrow afternoon, we shall see if Adobe is going to make it happen, at least for one more quarter. Amazon's picking up a bid. So it looks like the semiconductor space in general is doing well today. Oil companies are getting some investors come into their space. They had a bad day yesterday, and today it's looking better. Let's take a peek at this space here. Looks like everything but FANG is, and I think this is Diamondback Petroleum. But everything else is going up higher. Industrials are lower. Consumer staples are lower. So the investor is thinking maybe that consumer inflation report is making people think, well, the economy is doing okay. Inflation isn't a big giant problem. So just one day, Netflix is higher. All right. So we'll let that continue to do its thing. I think you wanted to talk about FIGR. Let's talk about FIGR. FIGR is a newer business. And this is the kind of innovation that's really fun to watch and watch it kind of form and take over and do things a different way. FIGR Technology Solutions, a financial technology company, provides blockchain-based products and solutions in the United States. The company offers a suite of blockchain-based solutions for its marketplaces, including lending, trading, investing activities in areas such as consumer credit, digital assets. It also provides technology-enabled loan origination system and pairs this system with a distribution marketplace, FIGR Connect, that provides access to a deep and broad pool of capital partners and so forth. So this is, in a lot of ways, potentially the future of a lot of financial services, lending, trading, and so forth. Now, FIGR's not completely alone in this space, but they are a company that's fully focused. They're all in on the future. It's not like a legacy company is saying, "Hey, we want to be involved in this, but we're going to keep our legacy business and try to develop, the next generation of what we're going to do." Now, these guys are all in. It's just they're betting completely on the future. Now, this stock has been. These guys are a new issuance, right? Yeah. So they came out September 11th, 2025, and from where they IPO'd to where we're at now, it's, whoever bought it at the moment that they IPO'd is doing all right. This stock really rose, but it's really come down. It says small cap, 8.7 billion. Forward P is 40, but they're making money, which is good. It's a newer company. Sometimes these newer companies take 3, 4, 5 years to make money. These guys are already making money. They are growing nicely. That's solid growth. The quarterly looks even better. So looks good. Now I'm a little apprehensive about recent IPOs. Okay. It's rare that I get involved in a young business. This one here is a young business, like, just issued out, but the fundamentals look good. They're already making money. Okay. Some things that are positives are the growth rates. Top line growth looks great. They're already making money. It's a very good sign when a young business is already making money, which tells me that as they get bigger, they're going to make more money. They only have to buy certain assets and pay for things once, and then they can sell as much as possible going forward. So those things, that the economies of scale begin to enter the picture. So if they're profitable now, they're going to be more profitable in the future. As we look at the forecast for this business, we've got 9 analysts that cover them. They think it's discounted. In the future, we are looking at the quarterly. So let me switch it over to the annual. We're in this year, 2026. They're supposed to put up a growth number of 64%. That is a very good number. That's an impressive number. And they're going to double their profitability. And the future looks good. These numbers look really good. Okay. I'm still putting this in the category of, is it too early to invest? I don't like getting involved too early. Also, these guys are part of the crypto space, the next Web 2.0, whatever you want to call it. I'm in Coinbase. I'm happy to be in Coinbase. I think Coinbase has got a grasp with 2 hands on the future. Coinbase is going to be part of the future. I think FIGR is going to be part of the future. But let me kick it over to Daryl. I want to hear what he says, and then I'll tell you when I come back what I would do with FIGR, and also show my valuation on FIGR.
Yeah, so Peyton had a question. I wanted to look at this one anyway, but Peyton had a question about where's a good entry point. And because this is so new, it's really hard to say. Yesterday, I did add probably 10% to my holding. It was before the conference that they were scheduled to present at yesterday. but they ended up after that shooting up 25%, and they're up 6% at the moment. The RSI is above 50. We had a PPO crossover, and look at this accumulation line. It is just straight up right here. So some big names are coming into this. Yesterday we had 6 times the amount of average volume. Let's see. Yeah, 1 point. Yeah, it was a bunch. I think it was 6 times the average volume. So anyway, they're trading above their upward sloping 21. The 5-day is really taken off. So the conference was really good yesterday. They explained all the technologies that they are in and how they are growing, the partnerships that they're developing. So this is one that I'm pretty excited to be a part of, even if it is early. The 2 founders are not amateurs. One was the co-founder of SoFi. So if you're familiar with that company, he is the co-founder. And then the other co-founder of FIGR has been involved in these kinds of technologies for several years. And then last week we were, did I save the right chart? I meant to show the correlation because there was a question about correlation to bit graph, but evidently I didn't save the chart correctly. So I'll redo that and we'll revisit it again the next time we live stream. It's not as correlated as you would think. I remember when I was analyzing that it wasn't as correlated as I would originally thought that it was, but for some reason I didn't save the chart properly, so we'll have to skip that for today.
Sounds good. Man, we've got a lot of comments. Thanks, everybody. Good to see you, Alex. And good to see you, Peter. Peyton, thanks for all the comments. Let me try to catch up there. So let me show my valuation on FIGR. And FIGR, I think, has a really dynamic business. It's most definitely the case. I'm just not there yet on the stock. I'd probably want to give it 6 months. I don't think I'm going to miss out on anything. 2026 is not going to be an easy year to invest. Okay. It hasn't been easy to this point, and it's not going to get any easier going forward. Got this war going on. If it gets worse, we're going lower. And, we got high oil prices. Okay. That's going to put strain on some sectors. So time is on my side, and I think I'm just going to give it a little bit of time. I like the business. I think the business is terrific. So that's where I'm at with FIGR. Let's take a look at the heat map. Then we're going to get back to those comments. Looks like we're establishing an emerald coast here on the left side with just a lot of green. Wow. Looks beautiful. Great. Good to see that these stocks are doing well. Uber picked up a nice bid today. Now, Uber just formed a partnership with Zoox, which is Amazon's play on robotaxi. So when you go to Las Vegas, you could ride an Uber, but it's a Zoox self-driving carriage. And I think that could be Uber's angle to succeed in the robotaxi era, is partner with Waymo, Zoox, and they're doing a partnership with Neuro, which is a robotaxi software. That partnership is going to involve Neuro and Lucent, or is it? Yeah, is it Lucid or Lucent? I think it's Lucid cars. They're EVs, and that's going to be a service that goes to market. It's going to be on the Uber platform, and it's probably a lesser known service that's going to come out is from Mercedes, NVIDIA. They're going to come out with robotaxi. So here comes Mercedes into the space. Of course, Tesla's in the space, and we have some Chinese competitors. Pony AI is a robotaxi company. There's a couple of Chinese companies that are already in production, in service. So I think that's where Uber can go partner with these companies. If it gets overly competitive on the technology side, Uber is going to win, because if there's 20 choices of a technology for robotaxi, it's going to be a knife fight between all those 20 of who's a little better. If they all basically do the same thing, they pick you up and they drop you off somewhere, right? And so long as they're accurate and safe, you're like, I don't care if it's robotaxi from Waymo or Zoox or Tesla or Mercedes. I need a ride to the airport. Pick me up, get me to the airport. Pick me up and get me to my destination. I'm going to a doctor's appointment or something. And I think Uber's got a good position. I like where Uber is headed. All right. So, Alex, great to see you. Falls Grave. Let's take a look at Path. I like Path. I like their business, but they haven't been growing fast enough. Give you a preview there, and then we'll come back to it. Brishy, man, it's been a little while. Good to see you. Nebius is up because NVIDIA decided to put $2 billion of investment or something like that into Nebius, because Nebius is a big customer. They're kind of like, they want Nebius to continue to flourish. That way they keep buying NVIDIA GPUs. And I'm sure part of that investment is you're going to buy NVIDIA GPUs. You're not going to buy AMD GPUs. You're not going to buy their competition. Path is reporting today. That is interesting. Probably after the market closes. All right. So I think we handled Peyton's question. Entry point. Did you answer what would be a good entry point on FIGR?
Yeah, it's so new and up and down. It's really hard to pick. So I've been buying when I think it looks okay. I happened to get lucky yesterday, and that's up 30% since I bought it yesterday. But I also sold a $25 strike, which is doing really well right now. So that's up 96%.
Very good. Okay, so Ricardo, good to see you. So international ETF, IXUS. All right, we'll take a look at that. Since we're going to talk ETFs, I'm going to put ITUS. And then last night on the stream I had, somebody brought up an ETF for copper, and I think it's COPP. Take a look at that one because it really caught my eye. I'm like, wow, that is a good idea. It's a good angle. All right, so all right, I think we're caught up there. Yeah, and I agree with you, Brucey, on Nebius. But it's not the first time, won't be the last time. This kind of stuff happens all the time where, a very important business, they will support their supply chain, or I should say their clientele. Okay, so I think we got FIGR handled. Let's go over to Path, and then we'll go over IXUS. So Path is a software company, and UiPath provides an end-to-end automation platform that offers a range of robotic process automation solutions. primarily in the United States, Romania, and the UK, the Netherlands, and internationally. The company delivers software robots that emulate human actions with precision and speed for organizations to automate repetitive tasks. Its platforms embed AI, ML, NLP, I don't know what that is, natural language processing capabilities, improve decisioning, information processing. So this is what is going on. AI, and speaking for myself, I've been using Gemini quite a bit. And I can tell you in some areas, Gemini is absolutely awesome. I've been able to get to certain areas of knowledge, software development, like any financial calculation I ask it, solid. And in some areas, it's okay, but it's not incredibly valuable. Now, Path is designed for a business to look at their repetitive tasks and say, we have this business, we have 10,000 employees, and there's probably 100, if not 500 repetitive tasks that you can put on a Path platform and make your business more profitable, faster, leaner, more flexible, just a lot of things, positive adjectives that you would put in there. So the story I like this story. The only problem is the stock came out with a lot of fanfare, sold off. That's not the problem. My problem is you got the story. It's kind of like somebody graduates from Harvard. They got a real impressive degree. And that person's going to be unstoppable. And then you're like, what kind of work have you been doing for the last 10 years? Well, not much. It's like, well, what happened? So you got the great story path, but where's the growth? I mean, we saw FIGR growing like really fast. We saw Astera Labs growing like super fast. Where is the growth? I'm thinking of that little old lady. Remember the Wendy's commercial, Where's the Beef?
Yep, exactly.
Going back 40 years, maybe 50. Where's the beef? Where's the beef? Where's the muscle? You've got the right story. So that's my problem with Path. If they had a growth rate of 40%, this thing would be worth 10 times more. That's not an exaggeration because the market is excited about AI, needless to say. The market is looking for proof points that, hey, collectively, the big hyperscalers are going to spend upwards of $800 billion, almost $1 trillion of investment in data center. And we, for the most part, are seeing some evidence that, hey, this is going to be valuable. Like I talked about Gemini. I'm sure if you're using OpenAI, Anthropic, you probably experience some of that value as well. Path is the right company at the right time, but their execution is not there. What's the problem? Is it that Gemini is taking all their business? And FYI, UiPath, you have no chance against Google. If Google can do what you do, you're done. Game over. Do not pass go. Do not collect $200. If Microsoft can do what you do, game over. Those are just too big of institutions that have a network power that you're not going to get over the moat walls. Okay. You can storm the castle, but it'd be like, me and a couple buddies trying to storm a big, massive castle. We'd be done in 5 minutes. So that's where I'm at with UiPath. Qualitatively, I like the business, but when you look at the growth, that's why I look at fundamentals. I'm trying to see, they have a great idea, but are they able to market that idea, sell their idea? Is their idea the leading idea in the marketplace? Or is the competition winning? Is the competition taking all the eyeballs and taking all the attention. And I think that's the case with UiPath. That's my concern about it. They can announce, if they can surprise the market and say, we're growing at 25%, 35%, this thing's going to explode. This stock's going to go so high because its market cap is $6.37 billion. Okay. But it did get released with a lot of fanfare. It was supposed to be this phenomenal technology, and it hasn't been that to this point. Over to you, sir.
Yeah, I had to chuckle when I saw the question. Have you guys ever talked about Path? Because it feels like every other live stream we're talking about Path. So, couple things going. What's that?
Well, maybe I should download the Path software and just create a repetitive video that we could play when Path gets nominated. Back to you, sir.
It gets nominated a lot. So I pointed out quite a while ago that we had this high here, which was higher than the previous high, but that was on lower RSI and lower PPO. That's called a bearish negative divergence, and that typically leads to a downturn. And we actually got a sell signal on the RSI just a few days later. And we also got a sell signal on the PPO a day after the RSI considered it a sell. So that would have been avoiding a 40% downturn, which occurred over about a 2-month period. They did get to an oversold condition. The PPO is now in a buy signal. And we had, I don't know, it looks like 8 out of 9 days or so that were positive. These are all hollow candles, meaning that each subsequent day opened higher than the day prior and ended up closing higher than they opened. So we got a whole bunch of hollow candles here, which was good news. But yesterday was a red candle. Today, although we've only been open 28 minutes, is a black candle. Means it opened higher but is closing lower. So we're starting to see a bit of a divergence from these past 2 weeks. We're probably reaching a topping out point here. We will have some resistance around 13. We have that same death cross occurring here that we had on the other stock that we looked at. So the 50-day is crossing below the 200, and that's going to be a double point of resistance along with this previous high that we saw, which was sitting just below that at about 13. So you may end up getting another $1.50 out of this one, but then it's going to be facing a fight.
All right. It looks like the energy to buy software stocks is fading a bit, and the stock market's at least the S&P is down a tiny bit. I just checked it. Maybe it's up now, but yeah, it's up now. So market is buying. It's buying into Tesla. Interesting. So Google and Meta are going higher. So these big caps are taking on a little bit of investment. Financials is really, really down today. So this is where I think a lot of the problems lie. Regional banks. So the scare that, hey, we have some bad credit out there is getting to regional banks. That makes sense. Because regional banks, they do make, I'm going to call them riskier loans, not necessarily as a bad thing. It's just they know their region. They know, hey, this regional business is lesser known nationally, but we think it's a good company, and they're, we're we're going to give them a loan to expand their business or buy some capital equipment. So that makes sense. Asset management. Ares is down. Yeah, they do a lot of private equity deals. They do a lot of lending and so forth. Okay. Goldman Sachs is down. Big banks are down. So let's talk about American Express. Look at that. It's up a little bit. Let's talk about American Express now. This is a stock that I think on Friday they came up, and it's been on a sell-off, right? That started in December. It's down. If we look at the 3-month, it's down quite a bit. And when I looked at it on Friday, and American Express hasn't been a stock that I've liked a whole lot. I don't think it's as good as Visa, but it's not as expensive as Visa. Visa's like, its market cap is 3x what we're seeing here. But the P ratio is real good, 17.4. Pays a small dividend. But what was impressive was the top line growth has been very good. And when we look at the forecast, now we just saw consumer prices were under control, and the forecast of growth for American Express was supposed to be 19.2. I don't know that we're going to hit that. I think this was all set before we got into an environment that includes a war. But it's, even if they hit 15, it's still going to be good. And they just sold off. Its P ratio 17, moving to 15, moving to 13. So this looks like a nicely priced investment. Its profits are going to expand nicely. All this looks good, real good. So I'm like, man, this is looking real good. Let's take a look at the charts, and then I'll show you the valuation.
Okay, so this one is actually starting to set up pretty nicely, I think, here at the moment. We do have a 200-day that's increasing, so it's still in an uptrend. The 50-day, the shorter term average, looking at the last couple months, is actually decreasing. The 21-day is an exponential moving average, and it gives precedence to the more recent averages than it does, 21 days ago or 20 days ago. It gives more precedence to the most recent price action. That's what the exponential does. It's weighted towards the most recent days. And then the 5-day is also still decreasing, but we do have a support line that goes all the way back to May and June of last year. And we also have an auto support resistance line. If I go, and we can see why that one is there. So it was the highs in January of 2025. They were retested here. They were tested all through September of last year, retested again in October. And then they drove higher than that, and they've come back and tested that, what I call a quiescent level. So if we go back into a year, they're trading slightly below that at the moment, only about 5%, but they are finding support at this support level that we have established from back here. They are sitting in an RSI of 33. I don't know if they ever got below 30, which would be oversold. We are getting ready to have a bullish crossover in bearish territory. And this is one where we have the price action going down, but we have accumulation moving higher. So that tells me that some big boys are stepping in at these prices right here, which gives me some confidence that this is probably a bottom. We can also just see how much volume is traded here. over the last couple of weeks. It's been incredibly high. On this big move day here, we had volume, I don't know, two or at least three times, probably three and a half times. So this one looks really good to me. It's not one that I own. I'm not going to own it, but if I were to consider it, I would be thinking about entering here.
Okay. Well, I'm thinking about buying American Express, and I showed you the fundamentals, and it's a nicely discounted stock. It provides really good cash flow. And when I value that cash, they have a decent balance sheet. It gets a 61% discount using a 7.5 discount rate. And their earnings per share drives really good valuation. It's growing nicely, so I'm gonna give them a P of 25 because it's growing really well. It's good and profitable. So overall, this is a buy in my book, and I'm looking to buy. I might buy it today, and I'm going to try to preserve kind of my allocation by sector. I'm going to look for a stock to sell, and I'm going to replace it with American Express. So I'm going to sell one, and I'm going to buy American Express. So that's going to be my plan with American Express. All right. So Ricardo asked about this particular ETF. It's an international ETF, and it has a very low expense ratio. That's good. It invests in companies in Japan. Japan's been booming. UK, I don't know if their economy's been booming. China's doing really well. There's good economic data that came out of China. Their exports, right? And China's huge. Their exports grew 22%. That's huge. Like, oh my God, that's humongous. Switzerland, Germany, France, India, Korea has been booming. Netherlands, Spain, Italy, Singapore, Brazil, Denmark, South Africa. So you got a really good cross section of countries. Then you got these sectors, and you see some real good known companies, right? TSM, Samsung's been doing great. ASML's been doing great. Tencent. So these are really, really good names. This is a pretty good idea. I like the idea because I think the U.S. stock market's been doing great for 3 years. We're now beginning to see maybe this U.S. stock market have a tough year. International stocks had a good 2025, but maybe they are beginning a nice couple year run. So this is a good idea. Low expense ratio. I like it. Good idea. Any thoughts on this, Daryl?
Not on that particular ETF, but I'd like to show you a couple of other ones.
Mm-hmm.
And you need to keep in mind what the dollar is doing when you consider buying IXUS stocks. This is a SCHD. It's a dividend equity ETF. And we go back to January of last year, we can see that it really performed not all that great. It was only up about 5%. But then look what it's done since the beginning of the year. It was actually up 14% and still up 12%, although it is starting to curve over a little bit here. So I want to compare this to the international version of this. So SCHY, and I'm going to go out 2 years. And 2025, remember what the SCHD was up 4%. This one was up 33%. But it is starting to roll over a lot harder than the SCHD. So we need to take a look at one of the inputs here is USD right here. And the dollar last year was weakening. Okay, whoop. Let me get my fingers on the right buttons here. Was weakening all of last year. So that really helps international stocks and was a good reason to purchase into the dividend version of SCHD in IXUS. But now we're starting to see the dollar strengthen, so that is not going to be beneficial for international stocks or U.S. stocks that have a big ex-U.S. presence. So anyway, those are some of the things that I look at when I'm looking at international versus the U.S. Some things that I always try to keep in mind. I'm actually thinking of moving out of the international version at the moment, so I haven't pulled the plug yet, but I'm considering that.
Thank you, sir. So somebody asked about Futu, Peyton. We got earnings tomorrow. Futu had a very good day. I mentioned that economic data came out, exports grew 22%. So Futu really saw a big bump. So did other Chinese stocks. And this one here is doing great. This is the Robinhood-like company in Hong Kong. And there's a lot of investing going on in Asia these guys are handling. So this one is one of my investments, has a really low forward PE. It's discounted, good pricing on it. You see that when it IPO'd back here, it sold off in 22 along with a lot of stocks. But ever since then, look at that. You could have bought really low and multiplied your money times 5. Not a bad situation at all. 1 year, 44, multiple year. This just been a good stock, and it's still relatively a low cap, $21.3 billion. Let's take a look at the forecast and see what we're expecting to hear when they announce tomorrow. Nice growth in 2026. It's supposed to be really good growth last year. So here's the quarter that we're expecting to be announced. Wow, it's going to be a good quarter. 64% growth, 65% expansion of profit. Really good numbers. And, trading really goes where, if the market trades higher, boy, a lot of investors are in it. They want to buy more stocks. And, if we have, so the China economy is doing well. Asian countries, China's not involved in Iran. I think they're a customer of Iran's for oil, but they're not, sending warships and stuff out there. So I think their economy is going to be all right. And if they damage Iran, which they are doing, the Chinese are probably going to come in and rebuild it. So they're probably going to get some business out of it. So we'll see where Futu goes tomorrow when they announce. I think it's been a good investment for me, and I'm going to stay in it. I've bought shares on sell-offs and pullbacks. I'm not going to buy between now and tomorrow, but that's where I'm at with Futu. It's a nicely discounted stock. What are you seeing on the charts on Futu?
We have a 50. I'm looking at 6 months because the 1 year chart was very congested. The 50 days decreasing, the 200s increasing. It looks like within the next day or two, we'll probably have a death cross where the 50 crosses below the 200. Did have a really good day yesterday on above average volume. The RSI appears to be flat over the last 2 days, so we got a boost in price, but the momentum is relatively flat. We do have a buy signal as of the 9th of March, and I do see a bit of accumulation here. It's going to face some resistance at the 50 and 200 day moving averages, which looks to be about 5% away.
Thank you, sir.
Okay.
So we're going to talk about GlobalFoundries, and the semiconductor space has flourished. And the semiconductor business, it involves a couple of different company types. Of course, you have what you refer to as fabless semiconductor companies like Broadcom, and Nvidia. They design these chipsets, they design these GPU technologies, and they own the patents. And then they go to a foundry like GlobalFoundries or a Taiwan Semiconductor. And these are pure play foundries or factories to produce these semiconductors. And GlobalFoundries, high level, rationally, you could say, well, they should be flourishing because there's so much demand. But GlobalFoundries is not kept up with what is the most important type of semiconductor that is needed. And TSM's really gotten the lion's share of the industry. So when we look at evaluation, it's discounted. But qualitatively, I'm just not bought into GlobalFoundries. It's a business that could go higher. It was almost acquired by Intel, but Intel had its own issues. And it hasn't been doing well. I mean, the semiconductor space is seeing an economy that will probably be the best economy they have ever seen. Maybe that's overstating it because the PC build out was pretty darn big. But really, since the PC build out, like coming out of the 80s and going into the 90s, where households didn't have computers then, right? Speaking for myself, I bought my first PC in 1992. Then I had a PC at home. Was it 92 or was it 90? It was one of those years. And FYI, I bought myself a little pickup truck, and it's a nice pickup truck. And I paid as much for a computer. And it's like, geez, man, that's a lot of money. But I'm glad that I had it because it opened up a new world. And I got my 40 meg hard drive. I thought that was pretty cool. I took the leap forward. When did you get your first PC at home, Daryl?
I had a Commodore 64 in 1982 and my first PC in 1985.
Man. But you know what I'm talking about when households went from, it's almost like households didn't have a television and then they had a television installed.
Yep.
Households did not have a PC, and then boom, households had a PC. So there was a big semiconductor build out back then. Intel was Nvidia back then. Okay, put a period on that. So GlobalFoundries, you should be flourishing, but you're not. What's the problem? It's that they produce the semiconductors that are not the highest demand semiconductors at this time. So that's one of my apprehensions in investing in this stock, that it's just been a laggard during a time when it's just been a boom. I mean, TSM's just killing it, ASML killing it, Nvidia destroying, the previous semiconductor highs. So this one here is qualitatively, I'd rather just buy more TSM stock. That's where I'm at with the stock. From a valuation perspective, it's discounted. If you have a greater confidence in GlobalFoundries and you feel like, I think the market's going to recognize this value that I'm seeing, go for it. That's what investing is about. If you have a knowledge advantage or maybe believe a particular theme or trend is going to help this business, I hope you're right. I hope you make a lot of money on it. But that's where I'm at with GlobalFoundries. Your thoughts on this stock, sir?
Okay, the first thing that jumped out at me was the bearish negative divergence. So I just put those two lines right there. So we have higher prices here and here, but we have strength, relative strength that was not as strong as it was on that first run to this price. The PPO was in the same exact condition. So that would tell me that we're setting up for lower prices at some point. We look at Google, it took 6 months for that to happen. We've seen other ones where it almost happens immediately when you see that bearish negative divergence. So it depends on the stock and how the market feels about it at any particular time. But I think this one's setting up for some weakness, although the RSI or the 21-day moving average is moving higher, the 50 days moving higher, the 200-day is moving higher after decreasing and bottoming out right about where we have this auto support line. We've had this downtrend line there for months, and they did break out above that about on the 9th of January and had a really nice run, 34%. It is under accumulation. It leveled out for several months, did get a pickup here. Previous couple of days, looks like it's decreasing a little bit yesterday. Money flow is back to being in a neutral zone. So I think this one is setting up to go a bit lower.
Interesting. Thank you, sir. So all this talk about death crosses has scared the Astera Labs, and it's walking on water as we speak here. It's up 5.6% today. Does this change the death cross scenario that you were seeing?
I don't know. Let me go back.
It's down in a month. It's down 32%. Oh, man. Talk about a drop. Over the 3 month, it's down 25. Over the 6 month, down 46. Over the 1 year, it's up 99%.
Yeah, this is the one we were talking about, that it's been a slow grind with the 50 and the 200.
Mm-hmm.
So that 50-day may not stay below the 200-day very long.
Would it be a resurrection cross, or what would you call that?
A golden cross when the 50 crosses above.
So this thing
200.
can go death cross, golden cross, death cross, golden cross. It could keep doing that?
It could do that. I don't see that too terribly often, but it could do that.
All right. Well, I guess we got a topic for our next stream. Astera Labs has a golden cross. We'll see.
Yep, there you go.
All right. Good stuff. All right. So let's start landing the plane here. I think we covered all bases. So I'm going to scan the chat. But tell us what's going on with your channel this week.
Not much this week because it's tax time. And I know the next couple of days, 3 days, is going to be busy with taxes. So the only thing I done this past week is just put out my weekly review of charts that I found interesting for my portfolio.
All right. Sounds good. And let me mention, we have a brand new member, Tombstone. Thanks for becoming a member. I appreciate it very much. And please get me your email address. You can email me at victorhinvesting@gmail.com, and I'll get you set up with your perks. You get a good number of them. At your level, you get access to the watch list. You get access to the evaluations that I've got. So this whole research sheet, you'll get access to that. You'll get access to the watch list. And we're coming up on 400 stocks. It's a couple years in the making here. And you get to take a look at which stocks are discounted, priced at a premium. How many stocks we got? We're up to coming up on 380 across different sectors. So you get access to that. You get access to the member calls. You get access to the Discord. And eventually you'll get access to the website. I'm still trying to get the user management function working properly on my website. Then you're going to get access to that. So thank you so much for becoming a member. I appreciate it. And if you're not a member yet, consider being a member. I'd really appreciate that. But I think we covered all the topics. Let's see
Victor,
here.
there was one other question that I said we would talk about and didn't. So probably ought to spend a couple minutes trying to
Let's
answer
do
that
it.
question for Shadow Guy.
Shadow Guy. Who's that? Oh, that's right.
Yeah.
Shadow Guy.
So first of all, Shadow Guy, I review two different sets of charts for all of my holdings every single morning after I wake up. And one of them are these dynamic charts. They allow me to zoom in and out very easily. Um, and I can see exactly where the 50 and the 20 are and when they cross over, and I can step back one day and look over here and see where the actual values for those two are. So this is one platform that Stock Charts has. And then you guys are familiar with the other charts. Those are the ones I usually have on this show. But on this particular chart, which isn't supported on the other version that I typically show, is the anchored VWAP. So that's set right here. And I typically have that set back on an earnings day for that particular company. And then I track that anchored VWAP, which stands for anchored volume weighted average price. So it's not just the price, but how many shares were traded on that specific day. It's weighted by that value. So then I can see, where it's trading above that weighted price and below that weighted price. And I can see when it gets extended above, that several months later, maybe even years later. But you can see that despite all of this volatility that we see in Apple here, when you look at it on a weighted price, it's pretty steady as it goes along. So that's one of the reasons I use it, and it's only available on this set of charts. You may be familiar with the just VWAP, and that's only good for a day. So on my intraday charts that I use, I have the VWAP set here. That is only good from the start of the day to the end of the day. But similar to the anchored VWAP, it gives you the volume weighted average price just for that day. So I can come over here and I can see that it's trading right now. This is ABV. They are trading above their volume weighted average price right this moment. So VWAP is only good for a day. Anchored VWAP, you can go back and tie it to any specific day that you want to. And then one other quick analysis that I'll give you is last year, I mentioned this on the live stream last week or earlier this week. Whenever we started seeing the S&P fall last April and March, I had 1, 2, 3, 4, I think it was 5 volume weighted anchored prices and tied to specific lows in the past before that time. So then I was able to determine when it was reaching those particular levels. And I posted this chart every single day as we made progress through here to see, because some people were telling me it's not going to crash through here. It's not going to crash through here, but wow, it blew through everything. So I do have this particular volume weighted average price tied to the April 8th lows. I don't intend to share these every day, but that, kind of becomes my first level of support from a volume weighted anchored price. So that's how I use them. It's not supported on the other charts that we look at, that particular platform, but it is supported in the Stock Charts ACP platform. Hopefully that helps.
That was very interesting. Thank you. And sorry I missed that. Shadow Guy. Looks like Shadow Guy's viewing on X, which is great. And when you view on X, it doesn't highlight your name in green. When you view on YouTube and you're a member, it highlights, it puts your name in bold and in green. So it's really easy to see members versus non-members. So I apologize for missing that, Shadow Guy. I hope you're having a good afternoon where you live. And Dwayne, thanks for asking about the website. I'm working on access for advanced members and then the super members as well. I've been hitting a wall on how to set up basically access, and I haven't had time during the week to catch up on that. So once I get it all ironed out, I'm going to provide it to advanced and super investor members. If you're a standard member, you don't get access to the evaluations and stuff, but you do have a lot of free access within the website, like the super investor portfolios, the blog, and so forth. So take a look at the website when you get a minute. All right, so that is it for the show today. Thank you so much, Daryl. Nice work today, sir.
Thank you.
It looks like the market's moving a little lower.
You're not sharing, by the way.
Thank you, sir. And I think the market's going a little lower. There was a story that the U.S. is going to release oil from the strategic oil reserve. And in my opinion, that's actually going to make oil prices go higher. And the reason for it is that it's so early in this conflict. If you're already releasing oil reserves, you're acknowledging that the high oil prices needs to come down, and it's not going to come down on its own. So to me, it telegraphs that this conflict's going to last, which communicates to the market, you better lock in your petroleum contracts. If you're an airline and you buy huge amounts of jet fuel, you better lock in your purchase price for the month of April, okay, and May and so forth. And that gives oil prices more stability at the prices they're at, and maybe even goes higher. We'll see how it plays out, but I think it's kind of early to tap the strategic oil reserve. For all I know, they're right, and it helps a lot, and it brings down the oil price to 75. I hope that's the case because it helps the economy. But I'm just kind of calling it the way I see it is, when you do that, it's, to some, some minds would think, no, that's going to reduce the price because you're going to have more supply, period. Got it. But it also communicates to the market, the U.S. believes this conflict is going to last longer than, it's going to be over in a week or two, or we're going to have some type of peaceful resolution and then just kind of pick up the pieces from there. So
the one thing I don't quite understand is it kind of makes sense for some countries if they have these strategic reserves and they're not an oil producer, but we're an oil producer with excess capacity. So I don't know, other than just to join the other 23 countries that decided to do this, why it makes sense for the U.S. doesn't make sense to me.
Yeah. It's above my pay grade, and they probably have access to some other data that they're making decisions on. I just think the message I heard 2 days ago was this conflict is going to be resolved soon. And now we're seeing a release of the strategic oil reserve. Doesn't communicate to me that this thing's going to be done soon. It means, okay, we're in this for a while and we want to start putting supply in the market so that we can keep this oil price down, because we don't want it to hit $120 per barrel, because that is going to we're in recession. It's like, I would say 90% sure $120 per barrel on the oil would be a recession, period. Just look at the other times we've been at $120 per barrel. So I don't think they want that. So they're trying to avoid it. All right. a conversation to be continued on another stream. Thanks so much. We will not be streaming on Friday. I am going to be on site at my mom's house, taking care of her furnace air conditioner, which needs some heavy duty work on it. And I've got somebody who's going to be doing the work on site, and she has nominated me to be the project manager. So I've been promoted, everybody, and look forward to spending the day with my mom. And you guys have a good rest of your week. We'll be back next week on Monday, and I'll try to stream tomorrow afternoon/evening for those that like to catch the evening stream. And hopefully I see your name on that stream. Everybody take care and good luck with your investments.